as of March 21st was 1865, the NAV 1865, and total assets of 867 million. Over the past week, Granny Shots gained roughly 1.19% compared to 0.53% for the S&P 500, or a relative performance gain of 61 basis points. I'd like to zoom out because the market's been through a rough, turbulent period recently. And as you can see, the S&P at 5770 is roughly at the same level it was 8 months ago. In fact, the market actually has been arguably trading in a pretty wide range over the past 8 months. Now, that might raise some questions for you, such as, well, with this recent correction, does that mean stocks can stage a strong rebound, or is there even fuel left for stocks to have upside? So let me just sort of point a few things out for you. If you look at money market cash balances,
Bitcoinzilla stands out with its simplicity and clarity. We've crafted an experience that anyone can dive into, whether you're a crypto expert or just a new to the crypto world. Now, guess who keeps his eye on us? The author of best-selling book Rich Dad Poor Dad, Robert Kiyosaki. And we want to take this opportunity and thank all the people who trusted us, and we read every comment. And the best part, it's free. Subscribing now means you will get all new information for free. Don't just follow the trends, stay ahead of them. Subscribe to Bitcoinzilla today and enjoy the new edge. Tom Lee dives into why dry powder fuels a V-shaped stock rally, with $TSLA as Exhibit A. Watch to discover market signals and learn more about this trend.
money market cash balances at the end of July of last year was 6.1 trillion, and they're currently 7 trillion. So even though the S&P's been roughly at the same level, money market cash has risen by roughly $850 billion. That's a lot of dry powder on the sidelines, ready to buy stocks. If you look at margin debt, even though the S&P is at roughly the same level, margin debt has been declining recently, and we don't have the number for the end of March just yet. It's published monthly, but my guess is that it's come down a lot, so I don't think margin debt has risen significantly. Again, that means there's some dry powder there. And if you look at fundamental long-short positioning by hedge funds, this is data provided by a prime broker, you can see that the net long positioning is the lowest. It's much lower than it was a year ago, and really it's the lowest since before 2020. All of that to me looks like it's fuel for upside, especially for a market that's been stuck in a range. And I think it is fuel for a face ripper rally. Now, the pretext to this, and it's been something I mentioned last week, is that the stock market had a waterfall decline, the fifth fastest 10% decline ever since 1950 at least, and that those other 6 precedent declines of 10% in a similar time period were actually shocks to the market. They weren't the start of a major downturn. So when you think about stocks from their 52-week highs falling this fast, this qualifies as a shock. Now, the drivers for this shock are, of course, the tariff war, the risk that Doge will create a recession, and that's evident in the anxiety of consumers. This notion that there's no Trump put and no Fed put. So these are the reasons why markets lost faith over the past month or so. Now, last week we got a reminder that there was actually a Fed put with the FOMC rate decision. And as with regard to the tariff war, as you can tell recently, the rhetoric has been dialed back. And it looks like there will be some deals coming into place, but it won't be as drastic as many expected. In fact, it looks like Trump wants to make a deal.
Bitcoin climbed slightly to over $87,000 in early trading, showing resilience despite global market jitters caused by President Trump's announcement of a 25% tariff on foreign-made automobiles and auto parts. While stock markets, including major indices, have reacted negatively with notable drops, Bitcoin remains a bright spot amid the turmoil. Traders view the cryptocurrency as a safe haven during uncertain times, as investors look beyond traditional assets. The new tariffs aim to boost domestic manufacturing but have stirred concerns of further volatility across global markets. Investors are wary of a potential ripple effect that could impact multiple sectors. With market sentiment turning cautious, Bitcoin's performance stands out as it continues to attract attention. Amid these shifting dynamics, the digital asset's steady climb above $87,000 offers a glimpse of hope for those seeking stability in an increasingly unpredictable financial landscape. Investors continue to monitor market developments and carefully adjust their strategies.
Tesla is Exhibit A for a face ripper. If Tesla can stage a V-shaped recovery, I think that that's a template for what the S&P can do. Now, for a little context, Tesla has fallen 50% from 488 in December to a low of around 220. And the reason for that is that Elon Musk has become quite controversial because of his role at Doge. So much so that some analysts are calling for Elon Musk to take a step back from Doge. Now, that's not something that the White House wants, because if Elon Musk leaves Doge and goes back to Tesla, that might be good for Tesla, but that would stall, I think, a lot of the efforts for Doge and the government finding cost savings. And so as a response, the White House obviously wants Elon Musk to stay, and part of that has to come with actually making sure Tesla stock actually stops falling. So that is the Trump put at play. In fact, I think that's why we're starting to see what looks like to be a V-shaped bounce in Tesla. Our technician, Mark Newton at Fundstrat, believes 330 is the key level to watch. That would confirm a V-shaped recovery is underway, and that would allow or set the stage for Tesla to make all-time highs again. So from a Tesla perspective, which is owned by the Granny Shots ETF, it makes sense to actually stand firm here, expecting Tesla to bounce strongly. As for the Granny Shots stock contribution over the past week, as you can see here, roughly 2/3 of the Granny Shots outperformed the S&P over the past week. The top 5 contributors to performance were GE Vernova, Cadence Design Systems, Palantir, Advanced Micro Devices, and Netflix. The bottom 5 contributors to performance were Garmin, Meta, NVIDIA, Progressive Corp, and Accenture. Now, Accenture, of course, got hit hard because of its exposure to consulting as a government contractor. It is something that we have been mindful of and talked about at Fundstrat in our 2025 outlook. In terms of factor performance by style or theme, energy and cybersecurity was the best relative performing theme. These are the stocks leading here. As you can see, it's GE, Vernova, Palantir, and CrowdStrike. And the second is the style tilt, which is quality growth. It makes sense here to be in quality growth, especially if there is a V-shaped bounce. As you can see, the leaders here. And the third is the PMI recovery. In fact, if you didn't have the negative contribution from Accenture, this would be doing a lot better. But you can see the leaders here are stocks leveraged to a PMI recovery like Goldman Sachs, JP Morgan, S&P Global, Bank of New York, PayPal, etc.
Bitcoin's price currently hovers around $87,000, reflecting a market that remains range-bound as momentum indicators suggest trader indecisiveness. The daily relative strength index reads 51, just above its neutral level of 50, signaling that investors lack a clear direction. Recent data from Glassnode shows that on-chain profit and loss-taking events are declining in magnitude, indicating weaker demand and reduced sell-side pressure. Traders are witnessing Bitcoin's movement between $78,000 and $88,000, a range that underscores cautious behavior among both short-term and long-term holders. The technical picture adds further intrigue. After breaking above its 200-day exponential moving average at approximately $85,570 on Sunday, Bitcoin climbed 4.45% until Monday. However, the price stabilized near $87,000 and later retested the EMA, suggesting that sustaining a recovery depends on holding this key support. If the 200-day EMA holds, BTC might push towards the important psychological level of $90,000. Meanwhile, market uncertainty is heightened by political developments. U.S. Senator Elizabeth Warren has raised concerns that a new stablecoin bill could grant excessive control over people's money to figures like Trump and Elon Musk. Additionally, analysts warn that uncertainties around U.S. trade policies and new tariff measures could keep the market volatile. Traders remain cautious as Bitcoin's range-bound movement reflects overall market indecision. With technical indicators hovering near neutrality, investors await a clear breakout. A sustained recovery above key support levels could shift sentiment, while political and regulatory uncertainties continue to cloud the horizon, keeping the cryptocurrency market on edge. Investors monitor every move with careful anticipation in tandem. And do not forget to subscribe to Fundstrat. The most important news will reach your inbox on a daily basis and for free. I do not know why you have not subscribed yet. If you liked the video, give it a thumbs up and subscribe for more daily updates. Remember, knowledge is power, and we're here to empower you on your financial journey. Until next time, happy investing.